All right, time now for a look back at this day in history, December 2nd, 2001. That was the day Enron Corp filed for what at the time was the largest ever corporate bankruptcy. Now, it was a filing that came with a warning that a substantial number of Enron's 21,000 employees would be out of a job as the company's market value plummeted amid multiple investigations into allegations of accounting fraud. It was a stunning fall from grace for a company formed through a merger back in 1985 and built up through dozens of subsequent mergers to become not only the world's largest energy trader, but the world's 7th largest company overall. At its peak in the year 2000, Enron was officially pulling in more revenue than IBM, Disney, and Bank of America combined. By the time it filed for Chapter 11 protection in 2001, though, its shares were worth pennies, and almost 5 years of earnings had to be restated, exposing a company that was, well, not as flush and financially sound as investors had thought. That included more than $1 billion of write-offs for failed investments in water companies, in broadband trading, and retail electricity sales. It also included a $1.2 billion loss in shareholder equity because of dealings with affiliated partnerships. Now, a rescue buyout plan by rival energy trader Dynegy, it was scrapped 2.5 weeks after it was announced because of concern Enron still hadn't disclosed all of its liabilities. So a few days after that, Enron sought bankruptcy protection, listing roughly $50 billion in assets, making it the biggest Chapter 11 filing based on that metric. Now, that title, though, has been ceded to at least 5 other companies since. Can you name at least 3 of those companies? Well, here they are in ascending order. CIT, General Motors, WorldCom, Washington Mutual, and Lehman Brothers. Each had filings that did eclipse Enron. Still, Enron's legacy is just as notable, if not more so. That's because Enron, a name once synonymous with corporate savvy, is now basically a punchline, a synonym for corporate deceit and greed. And in the wake of Enron's meltdown, government prosecutors were emboldened to go after several other major companies for their accounting practices as well, targeting the founders, CEOs, and executives at WorldCom, at HealthSouth, Adelphia Communications, and Rite Aid, among others.